This is Market Week Live, June 21st, 2024. Information and support for traders and investors. Welcome to everybody. A lot of our participants coming in the room, and of course, people watching us on YouTube Live. So that's great. Welcome to everybody who is in the show watching this. And those of you that do watch a recording of this, glad that you did tune in. This is the legal stuff. It says that everything we do is for entertainment and educational purposes only. It's not investment or trading advice, that whether it be oral or written or any way we may show it to you. It's to provide information you could use and discuss with your investment advisors or decision makers. It does not function as a substitute for the advice of those professionals. Consult your own trading plan or financial professionals before making any investments or trading decisions. Please refer to our terms, disclaimers, full legal information at askSlim.com. This is our full team, 4 of the best cycle analysts in the world. I've been at it 50 years. Matt Arvey with me for, well, a couple of decades. Katie, the newest member of the team, but she is incredibly great at understanding cycle analysis and how to put that together with option trading. You've seen her expertise work. And you can learn about us by going to askSlim.com, meet the team, and you'll see the videos there for some interviews, and you'll learn a lot about us and our history and our relationship, which is great. If you want to contact us about membership issues or website issues, write to team at askSlim.com. Anything on our content, education, analysis, first-time specials that we offer and upgrades, you can write to Matt at askSlim.com. We have an amazing first-time special we're going to show you a little bit later in the show, so get ready for that. Coming up in this show, I'll bring you my opening comments on the markets. All the hosts are here, as I said, and we're going to show you trade planning with the askSlim team. Each of us independently pulled up some analysis, came up with a trade idea, and you're going to see our total approach to that trade planning and that idea. Matt's going to review the askSlim services, and he's going to show you a great one coming up, our PSP. I'll let you sit on that acronym for a moment, but you're going to be able to see tons of stuff at absolutely no cost. He's going to show you how to do that. And we'll have our express round with the whole team. Levels 1 to 4 members can participate. Add your questions to the Q&A. You can do that right now. The floor will be yours, whether it be about our services, trade planning, any way you want to discuss approaching the market. If you have trader psychology issues, chart analysis, any trading issues, well, you can bring that stuff up. We're going to take about 15-20 minutes and answer your questions. And then I'm going to bring you my stock market analysis. We're going to look at specifically the S&P 500. I'm going to bring the Russell in and the NASDAQ off of one of our chart systems. That would be the futures hub, and you're going to be amazed to see that, because that's a way, again, that's included in the free preview that you can get by signing up for that right now. The market condition monitor, I don't think I'm going to go to that one today. I'm going to show you the futures hub instead. So I think you'll appreciate that. Now, how do you watch the show? Premium members are sent a link to participate in that Q&A. Free and non-members, well, you watch it on YouTube, but we encourage you to become a level 1 through 4 member and then participate in this show. You can go to askSlim.com. You can get acquainted if you just take the PSP. That's free. If you want to get some other information, you could become a level 1 member for just $45 for 3 months. On YouTube, subscribe to our channel, click the notification bell, and like this video, give it a thumbs up. On X, follow us at askSlim. And again, any questions you might have, write to Matt at askSlim.com. All right, this is my opening commentary on the market for June 21st, 2024. Well, the stock market continued to make new highs in a slow holiday shortened week, with AI and tech continuing to make higher highs and take the lead, at least until Thursday. It was really the same story that we have seen for weeks, with the S&P 500 and the NASDAQ moving up sharply at times, and the broad market weaker, with breadth overall poor, and especially poor for this much strength in those indexes that we saw. That's the S&P 500 and the NASDAQ. In fact, for the S&P 500, it was 8 out of 9 weeks to the upside that we have seen in quite a strong intermediate rising phase. If you want to know what that language means, intermediate rising phase, and you're brand new to us, stick around. You'll learn about cycle analysis. Early in the week, it was still Apple that was pushing the prices up, and NVIDIA, as NVIDIA had multiple upgrades. And talk about ebullience. The targets for many analysts were raised to 160 or higher. The highest on the street is 200 in there. And of course, when you start to see those numbers, then you start to get reversals. And there was a pretty good reversal on Thursday in NVIDIA as some good selling came in for the last 2 days. Analysts also have been upgrading their projections on the stock market, with many of those projecting 6,100 on the S&P 500 or more this year. Well, I've got something to say about that. Thursday, we saw signs of a rotation as the Dow was stronger. At the same time, the S&P 500 and the NASDAQ had big reversals and were down. I mean, Dow had gains of at some point around over 300, while the other indexes were moving down. And there was even a rotation in AI in tech, because Musk came out and said his XAI will be using technology from Dell and SMCI. So of course, those stocks got bids just because you said AI. I remember when that happened just because you said .com. So there's always some familiarity at different times in the market. Friday, the techs led a pullback. It's been modest in here, even though there's been some good selling in some of those stocks. And we saw small early losses in the market moving around here on Friday. The losses seem to be coming more from AI and tech stocks than from anywhere, as the rest of the market isn't really in horrible shape. Just again, pretty insignificant breath conditions going on here today. So the stock market has made records in here in more ways than just new high prices, which we've seen, like I said, 8 out of 9 weeks. Just look at this slide, and I think this is a very important slide to look at. This is the historic concentration of the top weights in the S&P 500. And just for reference, you can look back here at the .com bubble, and the S&P 500, those 10 top weighted stocks were 26.6% of the index. Now here in June of 24, they are 37.5% of the index. That gives you a sense for this just unbelievable historic concentration. It's never, ever been like this in the history of the stock market, where so few stocks weighed so much in a key index like this. Well, that gives you some sense for the conditions that we have in the stock market right now. And I've said it a number of times, the indexes are getting lifted by very, very few stocks, money coming into those stocks very significantly, and the sense that earnings are going to be unbelievable for a long time to come because of the AI revolution. We had a .com revolution, if I remember correct. So I'm going to make these comparisons, and a lot of people will say it's not the same thing. And there are parts of this that are not the same thing. I mean, AI is going to be very significantly embedded into the architecture of our lives. There's no question about that, and no question that there are several stocks out there that are going to be very significant in that and very significantly benefiting from that. But this is a time period where you have to say that's really an issue when you have that kind of concentration. That big concentration means that when they correct, and they will correct mostly together, that you're going to see some of the biggest downside days that we have seen in a long, long time. You can't help it. I mean, it's just math, because that's the heavyweights in the indexes. And that means you're going to see some pretty sizable volatility once the market goes into a corrective mode. Nothing like VIX at 12 or 13 is reflecting right now. It's going to be something much different than that. So I think nobody's prepared for what could be some extreme volatility in corrective periods in the market. And with our momentum indicators and our chart structures on the S&P 500 and the NASDAQ remaining positive, and they have been positive this whole time. And we have not been shy about saying that. And well, they moved way through our targets that I had in the beginning of the year, which was at the most 5,100 on the S&P 500 this year. Up into our revised targets, which are now 55, which were 5,400 to 5,565. Right now, there's resistance at 5,500 to 5,565, and that is where I think it's going to have some problems, and we're starting to see the market starting to fluctuate. Now, the conditions that exists in the mid caps are not anywhere near as strong. That's the MIDI 400. And as far as the Russell goes, they're quite negative. So it's a very mixed market. And there's a potential that there's a rotation coming, but I don't think that rotation is really going to come until after this corrective period, I think into the summer. So, of course, summer just started, right? This is June 21st. Well, here we are into the summer. I think it's going to take it into July or early August. And I'm going to show you that as we look forward and here towards the end of the show, where we look at the stock market analysis. In the meantime, we have a ton to show you going forward in here. For the stock market this week, remember, everything that we do in the indexes in the futures is available to you, all of that analysis in a lot of forms. And in Future Speak show on Wednesday, Ari does just a brilliant job of presenting that to you. And all that information gets posted in our hubs and stuff like that. And, if you take the Popular Services preview, you're going to be able to see that. So that's a Wednesday show, Future Speak, for members, normally 2, 3, and 4. But you'll be able to get a peek at that. For the week, stock market, S&P 100 up, S&P 500 up small, NASDAQ around unchanged. They had a big reversal on Thursday. The Russell is up small, and the Dow up about 1.5%, so 1.5%. So you could see it's been kind of a mixed week, but there's a little sense of some rotation going on right there as Dow stocks firmed and the tech stocks weakened. I'd call it mixed and toppy right now is where we are. And some people would say, well, you're saying that too soon, Slim. Well, we'll see about that. Bond market. That is up a little on the 30s. The 10-year actually was up 1 basis point. So not a lot going on in the bond market, neither in the metals markets. As gold, really not much change in the week. Silver has been more volatile. I mean, up $1, down $1, and overall a small change for the week. I think silver is in a corrective period. I'm going to show you silver and gold. Just a way to see the conditions of them just a little later on in the show. And I think you're going to find that important and interesting, how you can access that information. Dollar up 0.3% on the week. This is the third week in a row of strength, and that's all about euro weakness. And the cycle patterns have suggested the euro pulling down and the dollar moving up short term in this period. I'm looking for a reversal of that in the next week, where the dollar moves down and the euro moves up. So watch for that. Oil gains 280. This is the second big up week in a row. It's moved into the resistance, which we thought the most it would get was 80.82. Now there's another resistance up at 84. This is a much improved pattern. It was a few weeks ago that I put out a trade idea that was a bearish idea in there, and it moved through our repair level, and that was the end of that, and we pulled that. So sometimes when something changes, we change with it. And that's what happened in the oil market. We were negative. It gave a bullish signal, and therefore the trade is pulled. In Bitcoin, it's down $2,200 on the week. And it's trading at around 63,700 right now. And I've been all over this bearish these last couple of weeks based on a breakdown. And I'm going to show you in just a little bit why I think there's a potential it's moving down to 52,000. Pretty far on the downside, and that's going to come very shortly. That's the opening commentary on the market. We're going to move into a very important segment in here as we all show you our trading ideas. This is trade planning with the askSlim team, where we take it from analysis to the trade. I'm going to do a more extended analysis in Bitcoin. I get a lot of questions on in Bitcoin as far as YouTube goes, people sending me replies, update the Bitcoin analysis, update the Bitcoin analysis. And as I tell them, we don't really take requests in social media. And then I listened that you have an interest in that. And then I saw the charts and I said, well, maybe I'll bring this short and intermediate term outlook for Bitcoin. You can see Katie's going to bring GE, RV, Las Vegas Sands, and Matt, the emerging markets. So some important analysis coming up in here. And again, for those of you people that follow Bitcoin or any of our futures, become a premium member and you'll be able to get these updates all of the time. So I'm going to show you right now as I look at the Bitcoin analysis. And you don't need to see that. Okay, so here is Bitcoin. Now, the what I have up here is, let me just get all these arrows in the right place. I can show you all this analysis. Okay, so what I have here is weekly, daily momentum, and the 2-hour charts in Bitcoin. And I'm also going to bring in a monthly chart because I think it's important to this analysis. When I look at the weekly and the daily, this is how I do and how our team does most of our analysis, in that we look at how these energetics work together. Now, what we saw in here in Bitcoin was a double top. Now, you can see in here the cycle rhythms. This is the money flows of the market. Just because it's going up, because the cycle cycle bracket is pointing up and then turns down over here, doesn't mean it's wrong. It gives us information that says at some point there's going to be a correction in here. And the position of where the correction comes gives us good information. When it comes way on the right side, as you see here, that is called a right-hand translation. And that tells us the next rally is likely to be strong in this rising phase. And you can see that. Momentum in a correction here, which is the reversal scout, that's level 4 study. And then it turned up right over there. You can see that. Now the cycle peaked right over here and it came down. And now the cycle is peaking early, making this double top. It hasn't broke down far enough for me to really be bearish. The daily chart is giving me information that is telling me to be bearish. Now you can see in here, I have 3 projections, and this trough aligns with a second monthly low. In other words, a test of this low or worse in August. Potentially lower than the April trough. So that would be lower than this trough. I said that the 23.6% drop is likely not enough for the correction on the monthly chart. I'm going to show you that in a moment. So this is the projection. Now you see the white space right in here. I leave that because I know there's time for a rally out over here. And this is where the real risk is, right over there. Now let's switch over to the daily chart right over here. Now, what's important about this daily chart is that this daily cycle, you can see that right in there, it has an average of 75 bars on the dominant and 25 bars on the minor. This is called the harmonic family. Go to our website, go to workshops, and there's some videos, and there's a video there for free. You can get an idea of what our cycle analysis workshop is like. And you can see in here that you have the momentum turned down right over there on the reversal scout. You can see over here that the momentum has gone neutral on our option bias study after being positive, and the slim ribbon PO is red, which is negative. So we have negative condition here on the daily. On the cycle pattern, see this minor cycle here? This is where it bottomed. You had positive conditions in here. It tested this, made a double top, and took out this low. That tells me that there are 1 cycle positive, 2 cycles, 1 negative, the second one negative, and the third one is very likely to be negative right over here. That gives me not only a condition for decline right now over this next 2 weeks, but then after that, you get a rally and there's a sell pending period. And I have a note in here. The period of risk is when the monthly, weekly, and daily trough line up together. That's this decline and this decline. Both of those in here are the daily troughs lining up in August. So that's actually August 8th. When I look over here, this one lines up right over here on August 11th. So there's downside pressure here on the weekly. there is downside pressure here on the daily. So right now it's in a declining sell phase. Breaking this low, it's negative. We put out warnings on that. And now if it rallies back in here, this is the 23% right there. That's about 65.6. This is about 66.9. If it popped up in here for a couple days, that's the sell area for me right now. If it just didn't give us a good opportunity, came down over here into the second week of July, and then rallied, I'd be looking for the entry right over here. So it's a short-term and more intermediate-term outlook. Now I'm going to bring in this monthly chart right here for you to see the comparison. So the monthly cycles in here are fantastic. So you can see the rhythms in here. This was a 79% drop, a 70% drop, a 39% drop, a 78% drop. And then this drop over here, only 23.6. That said to me, there's a potential that it's not over with and that this would fail and come down one more time. This right over here is lining up to August on the monthly chart. It says that there's the downside pressure from the monthly. So from the monthly, it's pointing on the downside into August. Now I'm going to go back to those other charts right over here. On the daily, it's pointing down into August. On the weekly, it's pointing down into August. All of that says this is a serious period of risk with the potential for a couple of selling opportunities. One right now, if it pops back up into here, it's likely to come down. And then one out over here sometime in the mid-July timeframe for a decline into August. This is a very bearish picture that we're getting in here on the daily. It says to me the weekly is likely to turn over. Let's just look at the momentum indicator here, which is the slim ribbon there, and you can see it's turned red. So I have the daily analysis overlaid here with the over this area chart for momentum, and you can see it became negative right over here. And then just like over here, which was that third daily cycle, it came up, tested the slim ribbon, and then got whacked out over here. That's what I think is going to happen over here. And then this dominant cycle pressure right over here will join up with that other one, and you get this decline. Two selling opportunities right over there, momentum conditions negative. And just for fun, here's the enter day, the 2-hour chart. Here's the slim ribbon PO, all negative. Slim ribbon PO is a proprietary level 4 indicator. The askSlim MCI is neutral right over there on Bitcoin, so not much there. And when you look here at the option bias indicator, again, that's a level 4, and that has now turned neutral. I expect the red dots to get on the bottom and that be negative. So I've given you 2 time frames when this could be a selling opportunity in Bitcoin. Overall, it looks really bad, and I think that there's a pretty good shot at coming down to 52,000 sometime in August. Overall, a bearish condition that I see in there forming and likely to get worse. That is my extended trade idea in Bitcoin, and I'm going to turn this over to Katie.
Okay, let me share my screen. Let me know when you can see the weekly chart of GE.
Got it.
Okay, perfect. So on the bottom here, we have a cycle bracket that's showing an average cycle length of 36 bars. Now, GE is inside the weekly cycle timing window. That's the period of time around this ideal cycle trough, plus and minus a few weeks, when we would expect GE to form that intermediate low and begin to move up in the rising phase of its next cycle. So we may have formed the intermediate cycle low here last week, but obviously, GE had this huge move up after breaking above this prior cycle resistance. You can see that it was really strong resistance at this level here, 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 over here. Broke out, huge move up. Got just above these prior cycle high resistances from back in 2017 and backed off from there. Our reversal scout, that's our proprietary momentum indicator here, it turned negative, and we got this sideways to downward consolidation toward this 23.6% fib. Now, our reversal scout is still negative, and we would like to see that turn positive to confirm the intermediate low. we switch over to the daily chart on here, we have a cycle bracket that shows an average cycle length of 26 bars. Now, you can see all of these positively configured cycles that made up that big move on the weekly chart. Positively configured, that means it ended higher than where it began. And notice that the slim ribbon remained positive throughout this entire time period. Our slim ribbon colors the candles red, green, or gray, depending on the momentum conditions. So then in this cycle, this past cycle, something changed, and we had the slim ribbon turn neutral here, bounce back up, turn neutral, and then negative as this daily cycle low formed. Now, however, our slim ribbon has returned to positive, and so has the reversal scout. So we are early in the rising phase of this cycle, with this next daily cycle timing window expected between July 28th and July 26th. If I quickly switch back over here to the weekly chart, our weekly cycle timing window also ends July 26th. So this is what we call an in-sync cycle. And we could have our intermediate low here, or it could form with this cycle. But one of the reasons why we are watching this closely is because the Spider Industrials ETF XLI is showing signs of forming its intermediate low, and GE is the largest component of that ETF, along with Caterpillar and Uber, which are also showing signs of forming intermediate lows. So I am bullish on GE over this intermediate time frame into the later summer, targeting the area between about 186 and 210. That is the all-time high from back in 2016. In the shorter term, we do have to be cautious in this daily cycle because it does exist within that weekly cycle timing window. However, there are option strategies that we can employ that do take advantage of that situation. So I recorded a trade idea video for our members to show this over on the Tasty Trade platform. If you would like to see that, please consider becoming an askSlim level 3 or 4 member. And I think that RV is next.
All right. Thanks so much, Katie. Great job. Let's go ahead and pull up the chart. We're going to look at what is a counter trend short-term long right now in Las Vegas Sands, or symbol LVS. Okay, so this is our both weekly and daily cycle analysis for the Las Vegas Sands stock here, with the weekly on the left, daily on the right. And the reason this is interesting here is because there is a bottom that is due to form, and we're seeing some very early signs of possible bottoming. I say possible, on purpose, because we don't have any confirmed low quite yet here. There is a bottom due here, 527 to right around 722. We have a series of lower cycle highs and lower cycle lows that are still in place. So this is in a bearish downtrend overall. However, we would be looking for a rally in the overall construct still of that downtrend, and we'll be looking for a move up towards that 48 to 50, 70-ish area on the intermediate term. So currently we are hovering right around 45 quarter or so, up around 50 cents on the day. If we jump over to the daily chart, you'll see the levels right here for Sands. There is a daily low that is due here, 531 to 621. And what I like about this is that you can see we are basically forming a little bit of a base down here. We had a solid buy candle, then it tried for the lows, couldn't get it, and is now hovering back towards highs. So what I'm basically looking to do here is on small dips down into 44.79 to 44.10ish. Look for it to hold around there versus the minor 78.6 at 43.61. And on the upside, looking for a move towards the 78.6 to the old swing high. So that's 46.75 to 47.78. Okay, so you can see that risk would be right around 116-ish. We're looking for a move of about 190 on the upside. And the last thing I want to pull up here is our MCM for Las Vegas Sands. This is a short-term time frame, and what I like about this is that we have our first change in our bias as of 6:20 at 3:45 p.m. Eastern time. This has now turned up towards slightly bullish, and it was bearish. So this is giving us our first sign of a change in bias here, and that's all using our tools. So there are good odds based on this, some of the evidence that we look for. Again, small dips to be bought and for a turn back to the upside based on our work. And I will go ahead and hand this off to you, Matt.
Excellent work, team. Fantastic, Harvey. Okay, I'm going to share my screen. As Slim mentioned, I'm going to be looking at EEM, emerging markets, and we'll be going through the trade planning questions that I typically do, that the team does, and how we can utilize the askSlim methodology to answer these. So outlook period, this is an intermediate time frame, 4 to 8 weeks. Talk about directional bias, how do I identify that? Look at key levels, including reevaluation, so our upside, downside. And then from that analysis, do we have a clear tradable edge? If so, what are those signals that are required that would suggest that trade is a go? Obviously, and most importantly, making sure that your risk money management rules are always in place. Okay, so I have the weekly chart here of EEM pulled up. And when you first glance at a chart, especially with an untrained eye, or even as a professional analyst, it can be overwhelming. Especially if it's a symbol that you haven't been tracking recently. The chart can look random, confusing. People say it can be messy. However, with an approach like the askSlim methodology, an objective analytical framework can be created. And the askSlim methodology is derived directly from the raw energies of the price action or money flows. And when it is overlaid with our studies and annotations, it comes to life. And for us, as an analyst, it tells us a story. And if that story has a decodable direction, then the analyst should be able to determine a set of technical evidence to guide that development of a logical trading plan. And you saw that happen today from each one of us analysts. So now let's take a look at EEM and see if there is a story it's telling that's worth listening to. So if I go back in time here, I'm going to go back to the COVID low. You can see there was just this massive rally that occurred all the way up to 58.29. And then post that high, it went into a major retracement that actually came all the way back and almost tested that prior low. Subsequent to that, it has gone into a huge trading range, fairly tight, and that upside was capped near the major 38.2%. So if I did a draw here using our fib retracement tool, going up to that high, major swing high, down to the major swing low, you can see here that right around that 38.2% had become a key resistance area for multiple cycles. Now, what has happened in May is that something changed. And in mid-April, we saw signs of that starting to appear. So if I zoom in, you can see here in this cycle here where we had this low that was actually a higher low, higher trough relative to that major low that formed. We had a strong right-hand translation that finished this dominant blue cycle. So that was an important indication that this next cycle could show us something that was new in terms of an upside progression. And that's exactly what happened as EEM broke out over multiple cycle peaks. It went actually back to a couple years here that you can see, and we broke through that here in mid-May. So the overall shape of this major pattern structure has shifted, and that looks like an important breakout that has occurred, but I'm still looking at this more of an intermediate time frame for this to play out. Weekly momentum has flattened really over the last few weeks as there was a small retracement, but overall this pattern structure is positive, and that's what's most important for this intermediate outlook. And now if I bring in the multiple time frame analysis here using the weekly daily view, we can start to step through the some of the evidence here. So on the daily chart, you can see that in this prior cycle, very strong, and we had a major breakout. We had a very strong right-hand translation. So overall cycle structure is positive also on the daily. The current momentum on the daily is positive with the reversal scout turning up as well as the slim ribbon turning up. So we have that in terms of the positive attributes on the daily. Now, if we go back over to the weekly, something to pay attention to is we do have this black cycle bracket here that we want to just watch because it has shown influence in the past. And if that's the case, then we may see some choppiness over the next few weeks. So that's something to keep an eye on. However, if we were to push through, I'm back on the daily chart here. If we were to push through the 78.6 here from this prior swing high, swing low, so we have a swing high here from the peak and then our low that occurred, you can see we have a 78.6 around here. If we were to get through that here in the near term, then that would suggest that this low came slightly early relative to the black cycle bracket here. And we're likely in that next more important leg higher on the intermediate time frame. So the upside targets based on the overall, some of the evidence pattern structures suggest initial target of 44.05. And then over probably the next 4 to 8 weeks, 6 to 8 weeks, we could get up into this intermediate fib confluence extension target zone of 45.35 to 46, which is also a major 50% fib. So those are the upside areas, projections, targets to watch for. And then in terms of reevaluation, there is a intermediate 61.8 fib right here, which is around 41.20. If we got a close on a weekly basis below that, that would require reevaluation of the projections. And if we got a violation below the 78.6, which is around 40.65, that would be negative and be warning of an early peak. And that would force this trade plan to be negated and a full reevaluation necessary. Now, when it comes to examples of signals that would suggest that the advance is resuming and the trade idea is a go, I'm going to pull over our multiple time frame grid here. And as I'm showing you all these charts, these are available directly with our level 4 membership, including the indicators and studies. So it is an unbelievable way to get direct access and be able to follow what we do really under the hood and directly. Okay, so I'm on our multiple time frame. We call this our raw chart streams grid. And from left to right, there's the weekly, daily, 2 hour and 15 minute. And as I said, I'm going to talk through the signals from most sensitive to least sensitive in terms of what may be suggesting that the next advance is likely underway. So in terms of most sensitive, and would be most anticipatory would be the 15-minute chart. If I was looking, and I would be looking for the slim ribbon, since that is the least sensitive of the indicators on the in this 15-minute time frame. I would be looking for that to turn back positive. Right now it's negative, and the 15-minute reversal scout is negative. So I don't have a trade right now, because that's, as we go through these trade planning questions, it is really important that you get to this final step, which is what are the signals needed so the trade setup is go. I've done everything else. I feel like I have a tradable edge. But based on the work that we do and the work that I look for in terms of price action, I don't have it yet. So I would need to see at least the 15 minutes slim ribbon turn up to suggest to me that that next leg may be starting. And the next would be the slim ribbon PO. So that is this indicator here. This is a level 4 indicator. What it does is it measures when there is a likely continuation. So it's measuring an overbought and oversold variable in there, and you can see now that the slim ribbon is positive, which means that you can see that the candles are green. We've had this minor pullback here. We've had one signal that suggests a potential continuation. So there's an oversold reading happening, but it's within the context currently of a positive slim ribbon. So as long as that momentum condition would stay positive, what it's trying to pick up on is when that continuation may be happening, where we're coming out of an oversold condition within the confines of a positive momentum, and that next leg could be happening. So that would be another potential signal. And then the final two signals would be a price breakout above that 78.6 would be a very strong indication that this is a key low and that the next leg higher is underway. And obviously also if that weekly reversal scout turned back positive. Right now it's really just treading water and trading sideways. So that's the look at EEM, and that's the trade plan that I've identified. All right, back to you, Slim.
Wow, that was great. I love the way you said the word edge in the trade, which is really what we're looking for in all of this analysis. And there's no way that we're going to get it all correct. But what we try to do is really put together a strategic approach so that we can put the odds in our favor And that's really what we're always trying to do, is to get these trade setups in a way. And Matt, you did a great job in talking about how the shorter term gives you information on the next longer term, looking for that 15-minute to give you the signal, and then looking for the next time frame, the 2-hour, to give you the signal. So that was a great example of how using all of our information together can give you a trading edge. So super work on that.
Excellent.
All right. So we're going to move on right now. We're going to keep Matt up on the podium, and he's going to tell you about this great opportunity. Matt, take it.
All right. Yes, this is a fantastic opportunity. In this segment is when I share with you what special promotion we have running. And before I do that real quick, though, for those of you that are brand new with askSlim, we offer several premium memberships for our subscribers that join, and that includes technical analysis services, innovative trading, trade planning tools, and then comprehensive education. And that's for various trading styles. And that also includes a separate service that we do have available for day traders, specifically for intraday swing traders. We have developed a very precise methodology for looking for those larger swings happening intraday. So again, we have 4 premium membership levels with also then that separate day trader service. But today, the announcement is that we are running our askSlim open house. It is a free premium services preview, as we've indicated up here on this top banner on the homepage. And for all of you that are have always been curious to what we offer here at askSlim, maybe you've been watching the YouTube videos, or have come out and seen some of the other segments that we've done in terms of free live events, or you've tested us out in the past, this is a chance to come back in, get another look at many of those most popular premium services that we do offer. It's absolutely free. There's no credit card required. This will be running for a few weeks, and you really will get an excellent taste of what we do here in terms of a world-class technical analysis team. Slim, RV, myself, Katie, we're all going to be participating in providing this information to you, the content. You're going to have specific services. You also have some of our automated trade planning tools. So a really comprehensive look at what we do. And you're going to be able to see, learn, and do. You know, when I say see, it means you get the opportunity to view our methodology, as you heard us talk about today, in a very deep, immersive look at it. And then you'll be able to really learn about it. As Slim mentioned, RV does a brilliant job as he steps through the charts that Slim prepares on major markets, on the indexes, on the futures markets. And whether or not you trade futures, it really gives you a chance to learn about our methodology. We'll also have trade ideas, and we'll have option ideas from Katie. So again, excuse me, it's going to cover a huge amount of information, styles. We'll have our new day trader cockpit will be available, not our full day trader service, but our day trader cockpit will be available. We'll have our charts hub. Again, just a lot of variety, and it will be very broad for you to be able to see in terms of the coverage that we have, the various styles. So whether you're a day trader, or if you're a short-term swing trader, intermediate swing trader, or even an active investor, there will be opportunities for you to participate and really learn and be able to see how we apply this information. So how can you get started? Well, if you're brand new, or if you're a free member or part of any of our free lists, you're going to want to come to askSlim homepage, just like I had done before here, and then click on Learn More, and that'll take you to the sign up page and the overview page. And then you click here to claim your free trial. There's absolutely no credit card required. It says there's no strings attached, and you will have full access to more than 10 of our most popular services. There'll be some surprises along the way. We're going to bring in some other fun and incredibly useful services that'll probably happen in the second week of the PSP. And if you sign up today or over the weekend, this is going to kick off on Tuesday. So there is going to be a little sneak peek preview that you're going to have, and you'll be able to utilize a few of our tools prior. So here's what the actual dashboard will look like through probably Tuesday or Monday. So you're going to get a complimentary look at the daily snapshot, which includes a ton of technical analysis on the S&P, the NASDAQ, and the Russell. It's got our 2-hour daily, weekly charts in there. Then you'll get full access to our charts hub. So that's our complete focus list with weekly and daily charts. And you'll have access to those over the weekend. And then on Tuesday, everything else is going to open up. So our day trader service in terms of the cockpit, and then all of these other services in here. So you're going to have a ton to be able to review, learn, see, and do with askSlim over the next few weeks. I will be hosting on Tuesday, probably around 12:30 Central Standard Time. I'll do a PSP info and trade planning webinar. So in these webinars, it's not about selling. It's all about learning, and it's about applying. So if you come to the webinar, you're going to have a chance to learn, and then also suggest some symbols that I'll step through how you can use our services to go through the trade planning process. And that's the ultimate goal, is that you can become competent and confident with your own methodology. And with us, you get a chance to see how pros use a methodology that has been built and evolved with under Slim's guidance for over 6 decades now and 50 years. All right, that's my segment there. Back to you, Slim.
All right, fantastic. We just love doing that premium service preview because
Yep, it's only once a year.
and we get the opportunity to connect with so many people out there that have not seen our stuff, and we're really excited about that. So if you're watching this right now and haven't been a member at all, this is just a great opportunity. And go
One more comment, Slim. If you are level 1, 2, 3, or 4 in any of the premium services preview items that you see here that you do not currently have, those will automatically be loaded into your dashboard over the next few days, starting on likely Tuesday. So you will also get a chance, if there is something that you typically don't have, you will get a chance to utilize that during this period.
All right, great, important. All right, this is our Q&A section. We don't have many questions there right now. There's nothing for me other as far as showing charts for any of the futures. For Arvi and Katie, we have FXI, NVIDIA, UNH, and Broadcom. There's a question there about a gap on Broadcom, so maybe you'll be able to show that to the downside. And there's also PLTR just got added in there. So we'll take 1 or 2 more, and then we'll be cutting this off. So I'm going to turn this over to Matt and Katie in just a moment. There's one question in here that I do want to take, which is, where do you think the money's coming from to continue to fund the expansion in the stock market? Could the U.S. government be buying? Well, first of all, I'm pretty sure that the U.S. government can't buy stocks directly. It's not like Japan, where they do that regularly or do it through funds. So I don't think that's the case. However, when you think about the fact that the U.S. government has deficit spending of $1 trillion or more every 100 days, we'll probably have a $3 trillion additional deficit this year. And the Federal Reserve overall has been extremely accommodative, no matter what they tell you right now about the Fed being tight at a 5.25% interest rate. The Fed is not tight. That is not a tight interest rate, especially when you have close to 3% inflation. So I would put the Fed at somewhere around neutral right now. Certainly not very restrictive at all. So the government is actually overall, especially with all the deficit spending, so pouring money into the system. And when money pours into the system, it eventually finds its way to the stock market. And we see that happening right now. And they have essentially just created another bubble out there. So that's what I think is going on right now as far as the stock market going up. Plus, it's moving up on momentum, and it's moving up on the desire to take advantage of that momentum and buy the stocks that are rising, especially when you have conditions very few stocks out there pushing it up, but analysts pushing up the projections. Nobody thinks there's any risk, so they keep buying those. But every day that we go by, the risks are increasing based on the narrow move in the stock market and the heavy concentration in the indexes. And that's why I said in the beginning of the show, I think that we're going to see some significant downside days once the market does start to correct. So I don't think the government is doing it directly, but I think the government is very significantly doing it indirectly. And it's not, people would say, great, the stock market's going up, everything is good. It's not good when the stock market is going up in an unhealthy way. And I deem this as a very unhealthy bull market is what we're in right now. So that's it. I see PANW has also come, so we're going to cut these off. And I'm going to turn this over to Ari and Katie.
All right, Slim, thanks so much. Let me go ahead and share our screen here, and I'll start and hand this off to Katie. All right, so the first one we are going to look at is the FXI. So we do have a long side trade idea out in the FXI, just for full transparency. There is a bottom that is due here in the FXI 610 to right around 729. This is a possible basing cycle where we have a higher low that is likely to form versus this low. So if we can hold this zone right around here, 26.25 to right around 24.30-ish, we'd be looking for it to turn up and then move through that old high right there at 29.53 in this next rising mode. You will see that the EEM is slightly what we would call out of phase versus that of the FXI. So we have the EEM in green and the FXI in blue. If we jump over to the daily chart now, there is a low that is due here in the FXI, but again, no confirmed low. A low that is due 6.7 to right around 6.28. We're watching for this to turn back up, but it has work to do. We need to really clear these old highs around 27.25, and then we'd be looking for a move towards 28.20 and 28.75. As you can see, we are looking for a move over the intermediate term towards 28.80 to 29.53, which is the intermediate 78.6 and the prior cycle high. Let's go ahead and jump over to the next one. We'll be looking at UNH. Question was anywhere from near term all the way to intermediate term. So we'll just go ahead and pull up the both weekly and daily chart here. On the intermediate term, there was a low that was due right here, 212 to right around 513. We sold off into that. This is just really classic action into a low where you're just seeing heavy hits on the downside into the trough. Literally, it is a sell now kind of mode. It doesn't matter what price. And then all of a sudden, bam, you form the low, it turns up sharply and then rips back higher. Right now, we're right in the middle of a big fat trading range, doing nothing from 440 up to 550, right in the middle. Basically, we're holding this 50 to this 61.8 on the downside, 482 to 472. We'll be watching over the next couple of weeks here for a short-term trough to form, and that indicates good odds of a test back up. But again, not a whole lot going on the intermediate term. On the short term, you can see that there is a low that is due here, 627 to right around 710 or so. We're looking for a move still back on the downside. I'm not seeing any reason to think that there is a short-term trough that has yet formed. There's a key 61.8 at 471.75, a 78.6 at 455.87. If we lose 455.87 on the downside, that would really be warning of an intermediate term peak that would be in place in UNH. If we jump over to the next one, I'm going to look at AVGO here. So this is a very interesting chart. Again, this is in our focus list, which we update right around 3 times a week or so and post to our site. This is a really meaningful chart to me. Is I have drawn in these blue trend lines to show you the angle of the rally and how it's changed over time. So if we go back to the fall of 2022 low, you can see we were rallying, on an average pace, we would say for this underlying. Then all of a sudden, we then match these lows, and it's going up here. So it's getting steeper. And then we match these lows, and it's getting steeper. And look at this rally over 10 weeks, 53% over 10 weeks. And you can see this is by far the fastest move that this has had from key cycle low back here to the cycle peak back here, from key cycle low here to the cycle peak here, from key cycle low there to the cycle peak here. This is by far the fastest peak. So what that says is, in my view, we're very likely getting into an area where we really should start to form a peak over time. This is likely going to take some time here, as there are still, you can see all trends are all pointed up. There's no reason to say that there is a peak yet, but we would likely start to see that after this really sharp move up, and you can see getting quite overbought here. Reasonable to see this chop a little bit and then start to work that off on the downside, with that next trough only due towards the fall. On the downside, you can see that there is a 1600 to 1450 zone. That's what we're looking for. Now, on the daily chart, look at this. 3 unfilled gaps. I do look at gaps and watch how quickly they're filled and whether or not they are filled. In this case, we had 1 gap, 2 gaps, 3 gaps that were unfilled. It is extremely rare for any underlying to have 3 unfilled gaps. And you can see, as soon as that happened, we then filled the gap on the downside. And again, the overall bias is positive, but you can see that this is highly unusual moves on the upside. And it says we're likely getting a little bit overdone here, and this underlying is due for a rest. There's a low that is due here, 7.2 to around 7.10 or so. So we'll be looking for a move back down, and there's a zone here from 16.35 to 15.16. We just have to watch to see what this will do over the short term, but my overall bias would be a slight move like that, just easing off on the downside. There is a gap down here at around 15.07 or so, and a gap down here at around 14.60. And we'll have to see how far this ends up trading. But as I said earlier, this is likely going to take some time as you see this really oscillate. I would say oscillate near highs and just work off what is a very overbought state on the intermediate term. Okay, so that's the look here at AVGO. My last one is PanW. So PanW, we are looking at this name, but it's holding in. There is a trough that is due on the intermediate term, 3.4 to 5.13. It's holding. It isn't doing anything yet. It's just holding. As I've drawn in, there are levels here on the upside from 334.60 to 335-ish on the intermediate term, not giving us any reason to see that a peak has formed quite yet. On the daily chart, you can see we have a zone here from 310 to 301. I was looking for this area to hold. It is holding, but it's not quite going yet. So I do want to see this try to turn back up quickly. If it can move through the old highs at 324.68, then we have a zone here from 332 to right around 345 in the short term. And the next trough is only due right around the middle part of July. If it loses the 61.8 at 301 and then the 78.6 at 295, that certainly raises the odds that you've seen a daily cycle peak right there. And I will go ahead and hand this off to you, Katie.
Okay, let me share my screen. First, we're going to look at Palantir. Can you see it?
Yep, good to go.
Okay, great. All right, so we have a number of positively configured cycles from way back here. And that means that all of these are ending higher than where they began, bullishly configured. This one did get down to the 78.6% fib, but made it above the prior cycle high here. I think that we are getting some warning signs here. We formed our intermediate low. We had a giant bearish engulfing candlestick. However, it was able to get above that up to the 78.6% fib of the move from this high down to this low. Backing off this week dramatically, this is almost forming a gravestone doji. So I have put in a support zone here. And I've projected down to the bottom of the support zone, but it might get even lower than that. If it does break below that, we'll put in a 78.6% fib. We do have this weekly cycle timing window coming up that is 8.5 through 9.9. And if we switch over to the daily chart, you can see that that was that intermediate low there. We did get just above the resistance zone. This was a very choppy, strange cycle, but it was able to form a base. Then we got up to 26.57 here. This is backing off quite dramatically today. The move from there to there is down to the 78.6% fib. So we'll need to see if this can recover to make a higher high. But I am sensing some weakness in here just based on these types of moves. I don't think that we will see a higher high than this one in this cycle. However, the momentum is still positive. We've got a green reversal scout and a green slim ribbon. So we'll have to watch this one carefully, but it is giving some warning signs. The other symbol that I was going to do was NVIDIA. Very strong, everyone's favorite. Got to the top of the target zone. This is the 100% extension, backing off a little bit from there. We do have this still projected up to the 127.2. That is right around the 150 mark. The reason that we're showing some backing off today, this week, is because we're about to enter this daily cycle timing window. We made it up to this level between the 200% extension and the 261.8% extension. And we are entering daily cycle timing on Monday, and that goes out through the beginning of July. So about a week of timing window where we would expect this to pull back. And the top of this support zone is at 122-ish, down to about 110. As long as it doesn't get too much lower than that, that sets up a good buying opportunity for out into this next daily cycle. That is all I've got.
All right, great work, team. And I want to remind all of our participants here and everybody that's watching is that our level 1 to 4 members are invited to participate. We send them a Zoom link, and if you want to participate, please do become a level 1 to 4 member. And then you can ask questions when we do our live. askSlim Live is done twice a month, and hopefully you will become a premium member and participate. All right. This is the stock market analysis and projections. Important information I'm going to share with you right now. Make sure you read this slide. It tells about our approach to the markets, and it also talks about you using our information and the importance of you taking ownership of your own trades. For those of you that are just joining us because you're watching the clip of the stock market analysis, I want to encourage you to go back and watch the whole show. There's a ton of information there as we have shared trade ideas on 4 different symbols, and we did analysis on about 8 other symbols. So there's so much that we have shared that if you're just joining us right now, you haven't seen, plus the way to get askSlim information for free. And way you can join in our premium services preview. So I want to remind you to pay attention to that and do that for free. Join up for free. All right, stock market analysis. We're going to look at the S&P 500 weekly, daily, and intraday proprietary indicators and chart analysis. Then I'm also going to peek in at the Futures Hub, which has some other information on it. I'll give you a little peek at the other indexes just using the Futures Hub. Which again, you can use for free for the next couple of weeks during our PSP, so Premium Services Preview. Let's take a look now as we look at the stock market, and that's not what I wanted to show you. We're going to come back to that. This is the S&P 500, and I'm looking at the 20-year weekly. I'm looking at a daily here, at a daily also with momentum information and a 2-hour chart. I can just double click and blow this up, and you'll be able to see. And there's arrows up on the top here, as you can see. If you're not familiar with the Thinkorswim platform, that's where our live charts live. And level 4 plus members do get the live charts to put up on their Thinkorswim platform. And you can just click the arrow and move forward on the time frames as you see me doing right there. All right, so this is the weekly analysis. This, of course, has been bullish analysis in the S&P 500 as the cycle structures, the configurations and translations are positive. If you don't understand that language, just, take our workshop. I'll go to askSlim.com. There's a free video there, and you will be able to see, get some sense around the type of work that we do. We're looking at money flows. There's nothing hocus pocus about this. This is just ways to see the energetic movements in the markets. We use the cycle analysis and our momentum indicators in order to be able to sense that. And you could see positive cycle here, and the first part of this cycle positive, and the reversal scout giving you the momentum conditions. And right now we have been positive here on the S&P 500 and on the NASDAQ also. So this is the potential correction period that I have discussed at the beginning of the show. And that is that my sense was, because the enormous concentration in the S&P 500 with the top 10 stocks at record weighting in the S&P 500. At the beginning of the show, I show you a chart on that. It says to me that we're going to be looking for a corrective period in here that takes you out into the late July period there. And then this period out over here into August, September, maybe October is the next favorable period where we would expect higher highs. So this is a corrective period that could be very, very shallow. It could be much deeper than I have it drawn in here. And by the magnitude of a correction, we will know what the conditions are of the market. If you look at this corrective period right in here, it was barely perceptible. You never got a downturn in momentum on this cycle. And if you get something like that in here where they just chop sideways, go up a little, down a little, we're going to know that the higher track over here is where they're likely to take in that next rally. If this falls much deeper in here, then we're going to get a sense for a lower track as being how the stock market would rally in there. I have a high confidence right now that there will be some type of correction in here, because it's quite unusual to get cycles that are this powerful and no correction in the mid-cycle corrective period right over there. To get 3 of those in a row would just be incredibly rare based on the way we understand patterns. If you look at this cycle here that started the rally, you could see the mid-cycle decline was very deep right in there. In a bearish cycle, of course, it's really deep. But here in bullish cycles, sometimes you get deeper ones. And when you get a couple in a row like this, the next one tends to be more volatile. So I'm looking for this period of a correction out over here. And right now you can see I'm projecting to 52.90. That's only 170 points. That's not a very deep correction at all. It's barely 3%. There's no reason for me to be suggesting anything deeper than that into the summer. Right now, we'll let the market tell us looking at that. Now, when I look at the daily chart here, the way that we do this is that, well, we look at the cycle rhythms, as you can see right in here, and each of these very clear, as you can see, each of those powerful upside moves in this upside trend. We had a corrective cycle in here that you can see, and then another positive cycle. When you see the word swamped, it's because the upside pressure from the weekly chart is pushing up so hard that it really can't correct. This is a swamped cycle that made a little triangle right over there. This is a super swamp cycle. Same thing right over here. You don't get much in the way of corrections. That could happen in the cycle we're in right now here on this daily chart, and where you get just this modest decline in here. This is, you can see the upper channel right over there is where it's moved up into, and a correction down. This is 54.32, which is not much at this time frame. And this is really the cycle over here that I think is going to have the bigger correction. This goes all the way out into late July or beginning of August. So we could get a modest corrective period in here, and then a rally out over here into the July, and then turning down for something bigger. This is very powerful. Again, slim ribbon positive right over here, reversal scout positive. Everything in here is powerful, except that there's an engulfing pattern right over there. And that engulfing, see the engulfing over here that actually set the cycle peak? And I'm thinking this is setting that cycle peak and we go into the correction. This is 33.50 right over here. If it hits the 50% of this cycle, which again would only be about a 2% drop, right over here would be 53.10. So this is what I expect, that this cycle will be somewhat shallow right in there. And then the next cycle over here will take some sort of an upward movement here and then roll over and fail. And then the sharper decline comes somewhere out over there into that late July or August period, which would be then in alignment with what I see here on the weekly chart. Right now on the daily chart, there's no sign of it. You can see here on the bottom, this is the option bias study. When it is green all the way up on the top, that is P3. That's as positive as this gets. It says keep your options biased to the long side. Here you could see where it was negative. It was saying keep your options biased to the short side. The slim ribbon PO on the bottom is coming down over here and is about to give us another upward momentum signal unless this market turns down very sharply, which says that there's going to be some more wiggle over here before you get a correction. And this is why I think the daily chart is saying for now it's going to be shallow. If there's any pullback, it's going to be very minimal. And then this next cycle right over here, which again goes out into late July to early August, is the one that I think it's going to become steeper. Slim ribbon PO positive, about to give you an upside resumption signal. Option bias study positive, both level 4 studies for Thinkorswim platform. This is the slim ribbon on an area chart. It's really great to look at it this way because it gives you a real sense for the market momentum conditions on the daily chart, short-term condition that says it's still in great shape. And the slim ribbon often gives you support and resistance. And you can see on the way up, it was fantastic support all of the way. This is the area chart, so you can see it would come down and test the slim ribbon there. Here it came up and tested the slim ribbon and pulled back. And here it's getting support on the slim ribbon again. So right now, the slim ribbon midpoint is right around 54.14. So that's where I could see the very short-term support right now. This is the 2-hour chart. And on here, what we have is not only the slim ribbon PO, which is just giving you another upside arrow right there, but you can see the askSlim market condition indicator, which is down over here, which has a reading of 91 or 92 on it, which is super strong. For this to turn negative, and this would be one of the first warnings, it would get down under the 25 here, give us a warning, and get through it and move down through the minus 25 in order to tell us that the conditions were weakening on the near term. And that would give us, then we would start to look for what does that mean as far as the overall market conditions. So right now, everything that we see here, weekly, daily momentum conditions, 2-hour, all positive. One more thing on that 2-hour, this is somewhat typical when this is positive. You can see it moves up. It does a triangle right over here, gets into the slim ribbon, creates a flag, breaks out here into the slim ribbon, creates a flag, breaks out. So if you're a short-term trader, intraday trader, this is a very important chart for you to be looking at because for a person that's an intraday trader, this is a very dominant force. And it says, you know, once you break out of these consolidations, it's likely to move up sharply as it did right over here and here. So that's really an important chart for you to look at if you are an intraday trader. So I wanted to show you that. 2 hours is probably the longest time frame you'd look at if you were a day trader or an intraday trader. So that's a look at the S&P 500 conditions, just really strong. I want to go to our futures hub right over here. This is an amazing hub that we have because it's got all of my futures working here and everything that RV reviews and brings in future speak. So I just showed you the S&P 500 looking at the weekly daily chart. Well, you can look at the NASDAQ on here if you wanted to see that. It's going to bring up the weekly chart with our work. It has the levels in there and the daily chart that's here also. You can click on it. It's going to blow it up for you and you'll be able to see that chart in the NASDAQ. It looks a lot like the S&P 500, right? Moving up to that top of that channel. So that's all in here in the futures hub. It also is going to give you the Russell right there, which is much more of a negative pattern. You could see the daily chart in here is showing you the negative pattern, and that's been negative. You could see on the bottom over here, the market condition indicator has been, the option bias indicator has been red. You can see that very clearly. All of that information is in here, including our video analysis, the great work that you can that you see for people that are level 2, 3, and 4 that Arvi does on FutureSpeak. Well, here you could see that video analysis. You could see all the technical details right here. Can you imagine that's all in here for all of this? And also the colors on here are the intermediate conditions. And that comes off of one of our level 3 applications that we have. And so that comes here into the charts, and you could see the bond market quite strong. We've been positive on that, while the interest rate market 10-year yields is quite negative. You want to see my commentary on that? Just click that little icon right over there, and it brings up all of my commentary in the last time I did the update. So all of the comments are in here, all of the levels are in here, all of the charts are in here, and you can actually have this for free right now. You can have this for free by becoming a premium services preview member that we're going to be having that starts in just a couple of days. You could sign up right now for that. And it'll start the early part of next week. But this is the Futures Hub. Those of you that are interested in the gold and metals markets, I've been super bullish on them for the very long term. But you could see these are red right now, and these are telling you intermediate conditions are not good at the moment. We warned about the pattern here in gold. You can see on the weekly chart, this is really has turned down. Momentum is negative. I'll blow that up for you to see all that information for you is there, and the key levels. So you can see that just by being in this Futures Hub, and you can see the technical details, the cycle low dates in there, and it gives you all of that information, the key levels, that's all in there. Can you imagine all of that you could have right now absolutely for free? All you need to do is to go to our premium services preview, which is starting. You can see it's June 25th to July 12th. You get all this information in here with the Futures Hub that I just showed you. If you're just watching the clip of this analysis, Matt did a great job of explaining all of this to you. Go to askSlim.com, click Learn More at the top, sign up for free, no credit card necessary at all. And that's it. That's my stock market analysis. That's a look at the Futures Hub. And you can see that, wow, I mean, we have just brought you an absolute ton of information. If you're new to askSlim, you could start learning from this whole team of pros just by all of the ways that we showed you to get experience from us by going to askSlim.com. Sign up for that popular services or premium services preview. And you can ask Matt at askSlim.com about anything our education and analysis for traders and investors. And I'm going to invite the team back because I have dry mouth right now. What do you think,
Great
guys?
job,
Guys and gals?
Great job, Slim. Thank you so much, everybody, for joining. And I look forward to seeing you all on Monday.
Very good
That's right.
session. Have a good weekend, everyone.
Yep. Take care. Amazing show. Great information. Glad to have everybody here.
Yep, fantastic. All right, we'll see you live in a couple of weeks. There is no Market Week show next week. I will be at the WSOP. So wish me some luck. If you're playing out there, well, send a message to the team at askSlim.com and let me know you're out playing in the World Series of Poker. That's it for this show. We'll see you next time.